Good morning, everybody. Welcome to the Flow Show. It is Wednesday, 5th of February, and another little bit of quiet pause today, this morning. But we are seeing some decent moves, particularly in dollar yen at the moment, and the dollar in general looking a bit weaker. We'll get to the charts in a little while. Good morning, Kate.
Morning, Ryan. Morning, everybody. I hope you're doing fine.
Yeah, a bit of a cold coming on. The old kids, lurgy. They had it all last week, and now I've got it. So happy days over here.
It's running around like wildfire. This thing here in the UK.
Yeah, exactly. When isn't it? Right. Anyway, let's get on with things. PBOC bods are back at their desk after the holiday. The holiday isn't officially over until the 12th, but a lot of people will be going back to work. The PBOC has. They fixed their rate at 716.93, so just below the 717 level. The prior fix was 716.98, so only a 5 pip move there, but keeping the reins on the currency anyway. We had some data out from China as well. Their Caixin Services PMIs, because it's Service PMI day today. And where was it? There we go. Coming in at 51 from 52.3 expected. So a bit of a pullback in that one. Japan, you can see there too, coming in at 53. So decent improvement there. Japan seeing a bit of decent data coming in at the moment. Most notably, this stuff. Earnings data, wage data coming in very, very strong. Average cash earnings 4.8%. Huge bump up there. Overall wages up 4.8% as well. Overtime pay was a tick lower. What was important though, no idea why it never shows this on the calendar, real cash earnings. So after you've taken out inflation, rose 0.6%. Was expected to drop to minus 0.1%. So really good, strong numbers there from Japan. As I say, that got the yen running lower, or yen pairs running lower. Dollar yen finally broke through that 153, 70, 80 area, and it's not stopped going since then, pretty much. But certainly strong numbers there. Market doing a little bit of an adjustment now, eyeing up May for the next potential hike. We've still got to get over the spring wage negotiations to come, so I don't think we'll see expectations coming into before then. But Kay, it's at the moment looking good. I don't know if there's maybe some one-off factors in there, but still going the right way.
Well, they they do have year-end bonuses, but I'm not sure how they really calculate it. Perhaps it's in there as well. But as you say, the real wages are peeking their head back above the zero level, and that's been a bit of a holdback in the past years, really, because the real wages were not really following suit. Now they do. That's quite good for the Bank of Japan to continue. It's especially the short end that has pulled higher on the back of it. So that's the expectations for the next Bank of Japan hike to be brought a bit closer than when the people were first pricing it in. So it's going pretty well for the Bank of Japan, and it may be that they add a bit on top. Maybe when is the next meeting? Let's see.
It's March, isn't it?
March, yeah. Well, then, and then we have to wait for the 1st of May, right? Yeah, I don't know if they want to go before the end of the fiscal year. But yeah, certainly May is firmly on the cards now.
Yeah. And if that data keeps going that way, then we could be getting another hike. Oh, a hike every 6 months. Wicked. Right, moving on. New Zealand had some employment data out last night as well. Unemployment rate rising to 5.1% from 4.8% prior. So not so good there. 3 pips up. These are quarterly numbers, hence why you can get a bit of variation, because obviously it covers 3 months. Participation rate down a bit as well. So that's sort of double negative. That might influence the upcoming the next RBNZ meeting as to whether they continue with their cutting or not. Coming over to Europe, we had some finals PMIs in the services sector. Spain there seeing a little bit of a pullback, 54.9. Though it's not all bad news under the hood, because the details are showing that employment's picking up, prices are picking up, new orders are picking up. So this is one of those times where the headline can not really tell the whole story. Italy, another little drift back to 50.4, nothing major, still in expansion. France as well, the final number, these are finals, pulling back to 48.2, so still worse than last month. Germany kept its gain, jumped to 52.5 in the flash number, and that's where it stayed in the final number. Some very, very small signs of potential green shoots coming into Germany, but we saw that before last year as well, before it all went horribly wrong. Italy retail sales for December coming in much better than expected, 0.6% after a crappy November, down 0.4%. So take the 2 months together, and it's a little bit meh, one can say. Nothing really to take home from that. Over in the UK, we saw an improvement in the flash number to 51.2 from 51.1 in December. That went backwards to 50.8. The details not reading very good in that report as well. We saw the fastest reduction in employment for 4 years, and that will be something that the Bank of England will be looking at as they have their meeting tomorrow. Eurozone PPI looking a bit on the flattish side. Was expected to go down year on year. It came in flat. The month-on-month rise not as much as expected either. Back to the UK, and EU leaders are apparently going to have a Brexit reset summit in May. They're going to come over here and try and get a Brexit deal done. Again, this will be Brexit deal number 256 since we voted to leave in 2016. So only 8 years, and we might get a deal at some point. Coming over to the US data, we had jolts out, which was a little bit of a bummer, depending on your perspective. Job openings dropping to 7.6 million, was expected to stay around the 8 million mark. Don't know if there's any sort of weather, storm, fire stuff in there or not. December can be a bit of a wobbly time as well seasonally, so we'll see what that brings. The quit number, which is part of that, actually rose, and the quits number can be a good indication of people who are happy to change up jobs. They leave one job to get a better job, potentially with higher wages and whatever. That went up within that report, so it's not all bad news, just going on the headline. Again, the details making the story look a bit different. Fed's Bostic says if it wasn't for housing, they might already be at 2% inflation. Well, if the king had a fanny, he'd be queen. So that's what I think of that one. You have got housing and you haven't got inflation at 2%, so get on with it. Fed's Daily said the US economy is in a very good place. The Fed can take its time to look at the data and policy changes. Fed's Jefferson says there's no need to hurry further rate cuts, and that the strong economy makes the cautionary approach appropriate. Expects the disinflation to continue, though its progress may be slow. Date for your diaries next week. Fed's powers up before the beaks. He's going to testify for the Senate Banking Committee on February 11th next week. Woohoo! Get the coffee on. Mexicans Shine Bomb. She's putting forward a new bod for the central bank, Banxico, MPC, if I can say this right, Quadra, says that the bank has room to cut rates despite Fed's decisions. So that's on the pause that the Fed may have taken, that Banxico don't need to potentially pause either. We've been speaking about Mr. Trump and his job cutting spree, shall we say, where he's offered basically redundancy for all government workers. It's been reported that around 20,000 workers have taken up that offer thus far. So maybe not as much as he would like. There is some 3 million workers, government workers, federal workers on the books. So 20k isn't a big sum at all, but there's a ways to go to the deadline yet. And we still don't know how that may impact any future jobs reports, but it is a known unknown. But 20k the number thus far. Trump, he apparently, well, he was apparently going to sign an executive order yesterday to restore maximum pressure on Iran, saying that the order is aimed at denying Iran all paths to nuclear weapons and countering Iran's malign influence. That decision might have been expedited by stories that we've had this week that Iran might be closer to making a nuclear weapon, a bomb, than everyone thinks after getting plans from North Korea. So that might be why that's happened. However, the executive order got downgraded to a memorandum later on. Don't ask me why. Don't ask me why that makes any difference whatsoever. But obviously we've had Iran popping up, having a moan up, as you would expect. Yesterday, we were supposedly going to get a call with Z within 24 hours, or over the next 24 hours. That didn't happen. There's been no update, except that a call is being scheduled and will happen very soon. So maybe Mr. Xi isn't picking up. Trump himself says he will speak with Xi at the appropriate time and says he is in no rush. Again, that sounds like he's maybe had a bit of a knockback. And he's also fine that China has imposed retaliatory tariffs. New trade bod, Navarro, says that Canada and Mexico have agreed to enter into dialogue about actions to deal with 75,000 US deaths a year from fentanyl. Panama seemingly is bending the knee as well. They are now considering cancelling a port deal with a Hong Kong firm that they've been working on for quite some time. Over to the Ukraine, Zelensky says that he has working dates for a visit by an American delegation. And he says, on Trump's interest in rare earths, says we are open to investment by American companies. And Ukraine is open for investments from allies who help repel Russian aggression. So sounds like he's effectively ready to sell the silverware if we can get an end to the saga. Kay, anything from that lot you pulled out for notice?
Yes and no. Yes and no. I think the overall situation is one where the market now clearly thinks that let's keep it market related, that Trump is there to negotiate, put pressure and negotiate, and it's not out of who is going to benefit or win from it. What is clear, though, is that the market also looks at this, if it's not going to be too aggressive, or not, like he isn't shutting any doors at any time. That's not going to help the dollar too much. And I'm not sure whether market-wise, because we know he wants a lower dollar, that he's actually losing or winning. But yeah, I think the biggest scare of the worst things to come may be behind, at least for a few weeks, as we said already yesterday. The fact Xi is not picking up, I'm only I'm not really worried. I think sooner or later they will talk anyway. They do have a pretty well. I'm not going to say it friendly, but they do have a relationship of at least talking to each other. How it's going to pan out, we don't know. But so everything is like it could have been worse. That's the tone that we have right now. Well, for the rest, really, what's standing out is, as you were saying at the top of the show, those wages in Japan. Zelensky, Ukraine. Um, we don't know yet because the if the if Trump and his friends know and everybody knows about those rare earths, and let's also not forget that Ukraine is or was at least the vegetable garden of Europe. There's going to be more than just investments here or there, but it does look that and there's going to be conditions. Zelensky is not going to give it all up for a few U.S. investments. He will want security guarantees, right? And that is where it's all going to come down to, I reckon, because Russia may say like, well, hang on a minute. I mean, we also know what's going on over there, and we are not done here yet. So I think that's still a very, very fluid situation. Um, Regarding Mexico, I was surprised in a way that the Mexican peso did not follow the Canada move. It does seem that there are more uncertainty there than there may be with Canada. Might be that the China tariffs have something to say with it because there's some loopholes being closed. So that's a bit of an uncertainty there. And I reckon tomorrow, you were talking about this Canadian, Mexican official. Tomorrow we have Mexico. And maybe we need to wait, Ryan, until we got Banxico out of the way to know where the Mexican peso might be going next. So yeah, that's about where we are now at this stage. And what we also see is that less pressure is translating straight away into interest rates and yields, right?
Yeah, thank you very much, mate. Um, yeah, Mike, we are seeing yields coming under a bit of pressure. Global yields are coming under a bit of pressure. And you rightly point out that 10 years come under that 4.5%. We have been down here before, but the bounces off of there weren't looking particularly strong. So this move probably the one that's going to have some legs potentially. Kay, you seeing anything? Are we seeing a bit of a
Yeah,
flight to safety?
bonds are doing okay. Actually, what we saw first of all, that leg on Monday was when non-US yields dropped like a stone, and now it seems like the differentials they're still hanging pretty low, but we see the differentials also coming back down a little bit because the US rates are coming off. I think this time, well, we can never be sure, but all else equal, this time I think we may actually go for a little wander lower in the US tens. And we know, of course, the US is the biggest market in bonds or equities or you name it. So that may have an impact on the dollar, and is already having an impact on the dollar. Clearly, the postponing tariffs was let's say the clincher, but it was hanging in the balance there. And to come back on what Mike says about the tariffs looming for the EU, I think, Mike, it's if people think it's going to be inflationary, you may say that the yields may be dragged higher, but as I've been saying already, it is that to me is not the most important. The most important thing is that EU, if they get slapped with tariffs, it is going to weigh on an already very, very, very fragile growth. And if you talk about lower growth, that is going to overshadow every inflation that you can imagine in from the tariffs, at least. So I think that's where you rather look at why yields are coming down. I think it's the risk to growth rather than a risk in an inflation spike. That is I think overpowering the risk in that it may have on inflation.
Yeah, it's looking a bit of a risk move this morning. What with gold flying as well,
Yeah.
so we're seeing bond yields, bonds getting bought up. We're seeing gold up. We're seeing Swissy bid, yen bid. Yeah, it's looking a bit risky. Typical old-fashioned risk move in that one. But yeah, certainly these are the times when you've got to think. Are we going to get a move that's out of line with the fundamentals? Obviously, we've got jobs coming up as well on Friday from the US. ADP today give us a little bit of a insider, as well as ISM. But definitely looks like the market is not in the best of moods this morning. As you can see, their dollar yen hitting that 61.8 fib of the December move. If you have a butchers at the daily on that one, we've got a bit of moving average action around 200 DMA and the 100 DMA as well, closing. Bit of confluence around this area here, 152.30s. 152 for me is going to be the big level. It's going to be the 155 and the 157 and whatever in that sort of vein. So keep an eye on that one. If it's going to bounce anywhere, that will be where I'd pencil it to bounce. If we're going through there, then something is probably happening. Maybe that yields dropping is accelerating. So some decent levels to look at for the moment on that one. Ali, you're asking about cable and you became confused. Why did you become confused? You'll have to explain that. If you got out your trade too early, only you can answer that, mate. What spooked you? Did you have your plan? Did you stick to your plan? Did you bottle your plan? Those are the questions you need to ask yourself. Everything's sort of moving in the same direction. But again, I want to just point out you need to have a lot of context with some of these moves. We had the euro. Technically, it's proven that it stopped going down. That was a pretty solid hold on Monday. We gapped below this zone as well. And now we're holding it as support on the move back up. We ran into trouble here. Now we're finding support into this area. This one is going to be another test, just like it was since December. And we couldn't last move through it. And straight after it became resistance again. So this 104, 50, 60 area, 70 area is going to be a big test again. It's got to do all the hard work again. And if it gets over that, then it faces that bigger 105.30 zone, which we couldn't get through. Still, we can't retrace 50% of the December move. That's still up at 105.57. Still, we can't retrace 38.2 of this move from the 112s. So the context here is that it's still bearish in the wider picture. This is a strong bounce. Can't deny that. We have got a bullish signal of all this holding down here that it stopped going down. But if it can't get above simple levels like these, then it's not going to be heading anywhere higher for that point. So can we break through this level? Absolutely. But this is where the real tests begin now. If we get up to here and we find we can't get through, then we keep the bearish trend and probably we do a bit of ranging until we get the next catalyst for a move. But if we are busting up through these levels, then maybe we've got a bigger change afoot and we'll see where it goes from there. From here, it's probably in dip buy mode. But obviously, you've got to watch out for those headlines. Excuse me. Kay, I'm going to bang it over to you, mate, because my voice is going now.
Yeah, no problem. No problem. Cable, it's bit and until I see until Bank of England at least. And cable is beat not only, I mean, sterling is beat not only because of the cable, but I mean, yen apart, because yen is a different animal altogether. But if you look generally at sterling crosses, they are still doing relatively okay. Euro sterling, one of them. So sterling is still pretty well in demand. So we had 2, 3 levels that I was watching here. They all went now, and the more important one was this one here. Let me just take this one out. The more important one was this one here, because we had like prior lows, trying some breaks, didn't work. Then we stopped again. Then we had this Monday move, but now we are back above this little trend line, that horizontal line, and that's around 124.6075. That may be significant. And I have the opinion, or I have the impression, that we are in for a bit of a 125.70 test. It is a dollar move, this one really. We had this spike higher in the dollar on come Monday on the tariffs, and then on the relaxation of all those tariff measures. It started to turn around, but I'm still thinking about what my overall view for 2025. If you look at it a bit wider, I thought that the dollar may already come into some trouble once we get over a potential tariff hump for growth risks and stuff. But um, this to me, and I've said it in the room as well, what happened over those past 48, 72 hours, I think it's quite significant. It could be an intermediate low for the dollar. I'd love to see a retest, and I'm just taking the cable as an example. I'd love to see a retest of about like the dollar regaining 1% or so, and then really see whether this is just long dollars getting out of positions, or that we get a top formation in the dollar. And that is, I'm actually flirting with the idea it may be possible that we saw a bit of an intermediate top in the dollar with all those moves that we saw on Monday. So cable 124.6075. Top side to me is going to get interesting around 125.75, and then the prior high here just around 126.10. If that goes, then I think we could dream about higher levels. But I suspect that US walking in with the yields being around here, trying and I think there is a potential that they do break a bit lower into the 430s. I think the dollar may get another little snap on the wrist, and then we will see, as I said, what is going to really happen with that dollar in general. If you look at the differentials on the short-term differentials, we had this like big spike lower, euro versus US. Now we're correcting a bit. We haven't really corrected everything yet, but we're in the process of. And if those US 10s break lower, I think it may be dragging those differentials back to more neutral levels, which should in turn potentially weigh a little bit more on the dollar. And now let me get back to a couple of other things. The yen, of course. Yen has broken. It's broken the support trend line. It's broken the 50% down through 153.75, and now we are trading on, as Ryan already said, on 61.8. And so this is your next level. I think the major level that people are still going to watch is going to be around that 152 again. It's kind of a, whatever happens, a bit of a magnet level where the dollar yen comes back to and says like, okay, what am I going to do next? Or the players at least wondering what is going to come next. So we could have a look around here. Higher wages. The Japan potentially escaping from tariffs. I think it's too close an ally, and I reckon also the US needs Japan in the Asian area. I really I'm 85-15 for Japan escaping tariffs. It may help them. We have the Trump Ishiba meeting coming up on the 7th, so that's going to be interesting, especially also not only um, talking about Japan, because that should be okay, but also about the Asian region, Taiwan and those kind of issues will get thrown onto the table as well. So it should be an interesting meeting as well, but that's another 2 days away. So we'll wait for the results of that. So in the meantime, a bit of a level here, 152.5, and then 152, 151.90. See if we can get down there. All right. Those antipodians. They're doing pretty well, huh? Aussie broken now above 62.70 again, which was my next level, and now we are into the 62.90 zone, another small one. As I said, look at it from a little longer term aspect as well. I've said that 63.25 is going to be a bit of a zone, and maybe I put it on the daily. But 63.25 has always been a bit of a zone to me, um, on the Aussie dollar as well. I think I must have killed that line also. But it failed the last time up there. I think this is going to be the gateway to higher levels for the real gateway to higher levels for the Aussie. But if you look at risk as such, that to me tells this is a dollar move and not really a risk move, because Aussie and Kiwi are both doing all right. The Kiwi as well, finally recovering through that 56.40. Then we had a bit of a resistance here around 56.60. We are through. That's 57 is the next one, and here we have the 57.20.30. If 57.20.30 goes, then I think that may open for higher up. But in the meantime, let's first go and get the test there and see what happens there, okay? Because it could still be that just dollar longs are getting out of their positions because something is not working in their scheme for a higher dollar, higher yields anymore. Okay, something may have not completely broken down, but something has changed. Okay, so those long dollars needs to get out. I'm not sure whether the market is already starting to be short dollars, but it could be that if it completely turns around, we are going to see much bigger moves in those crosses. Ali, what's making Aussie dollar highs? RBA or China deal? No, I think it's just you know, Australia is not all about China. We know that Australia there's this lot about China, but it's not all about China. You know, they have their own economy as well. They are also exporting. For instance, they are exporting to quite a lot to Japan as well. People may not always be aware of that, but they are exporting quite a bit to Japan as well. And the data weren't too bad overnight either. You know, the services PMI comfortably above 50, and I think the market was just looking for that level here. You remember, I spoke about those levels, and that's right around here, like this 60 half mid 60s. The market got it, and now they're taking profit. So there's a lot going on here. But as I said, we need confirmation for this whole picture to turn around still. Okay, this is still, we had the move down, a move back up, a big move down, and now we are back here. We still need confirmation. All right. But I think in the meantime, it is possible that we are going to test. Yeah, Euro sterling, I'm still a bit short. I'm this little zone here, seemingly capping it right now. That's already enough for me to keep my shorts running, Ali. Um, Tomorrow, Bank of England, then there we should be knowing a little bit more about what they want to do. It was very limit border last time for a cut. I think they will cut this time, but we've seen central bank moves which are only have like a very limited impact in time. If everything comes out as expected, I doubt that it will be a very big mover on the sterling. The surprise here for me um, would be if they really go very, very dovish. And yes, growth wasn't great, but the rest of the data are okay, I would say. But this and euro is still struggling with its own problems. So for this cross, the surprise would be that they really go dovish, and that could put euro sterling, I don't know, back up to 83 three quarters or so. So that is it for me right now. Uh, okay. Well, I mean, we've seen. Ryan, are you feeling all right, or because I know you have been involved in the Canada? Do you want to do the Canada, or shall I take it, mate?
Yeah, I can have a look at it. It's
Because it's on a level. That's
yeah,
all
this
I
this
say.
this is bang on the level here. This
Yeah, we're here, so I can show it,
142.65.
and you can tell me what's your view on there.
Yeah, you have it. I'll sing it. Yeah, this is a bit of a line in the sand for me.
Yeah.
If we're through there, we'd probably be low 142s pretty quickly. I should imagine there's a ton of stops sitting under that level. What have you got there? Around you got a fib underneath that? Have you? What's that? Oh no,
Yeah,
it's
I
one
can
the
see it
same level.
around here, which is about 100 points lower, 140, 180.
Yeah. So I can see us doing 142s easy if we break this level here because it will be a range break. Take out the noise of the rally to 148. Yeah, but if it holds here, then I think we're going to stick in the range. It's putting up a bit of a fight anyway at the moment,
Hmm.
but the dollar's looking weak across the board. I think.
Yeah. Yeah, undeniably, it's looking a bit weak right now, the dollar. And again, I mean, looking at those tens, if there would be a move under 447 decisively, the dollar will probably get a slap around the ears again.
Yeah, and I just want to reply to Mike as well, who said that Aussie dollar is hostage to China tariffs escalation. Not necessarily, as Kay mentioned. If China's getting into a fight with the US, that can actually be beneficial for Australia because what China likes to do is go around shoring up its partners, its other trading partners, and suddenly talking nice to them to try and offset. So a bum fight with the US can actually be good for the Aussie as well. Not necessarily that Australia will fall into the same boat. So it's another aspect just you need to look at when thinking about the Aussie dollar and China and tariffs and whatnot. Anything else, Kay?
Well, yeah, the usual ones. Well, the usual ones. This one is bitter, undeniably big. Not looking back any day. Yeah, now as well, yields are coming off, so that's another push. So gold. We're already through the first extension of this relatively sharp setback, those $200 that we had at the end of 2024, the setback. And it really, well, we had one push, then a little bit below again, but now we're already through. Ah, I'm not looking at RSIs, but I know they are divergent, okay? But who am I to stand in the way of such a move? Okay, so if you look at it short term, I would even, this is very fragile, this 28.58. Look around 28.40 if you start to have setbacks. If that holds and we start to recover again, and I don't see what's going to stop this animal. I really, if we are looking for, if you're looking for short-term stuff, yeah, if it goes back below here or below here, you can try and play 20, $30 short. But look at this and look at the more longer term. There is absolutely no reason to actually get short gold. And I'm unfortunately, it's still working okay. But I thought that with the relaxation or the pushing back against tariffs or the delays in tariffs may have stopped gold a little bit. So I went out of my gold longs and I flipped into silver, which is okay because I flipped into silver around, where was it? Around here, around 31.28, is it? Yeah, around 31.28 the other day. So it did a very good move, but I thought silver would really outperform gold, and it's just following. It's not really breaking. So this morning I had a quick look at 32.5. I took some more off my longs. Um, by the way, I'm still very, very long-term long as well because I think we are going to end up at much higher levels in the long term. But in the shorter term, respect the 32.5 here today. We just had a look above and not going to say failed, but we can't make it stick right now. Back down to 32.30s here. That was the other little level. Watch what's happening if we get a move back down to just below 32. If we can get down there, bit of a test and then push higher, that's a possibility as well. Otherwise, if we don't get down there, 32.80, 33.10 is a potential next level there. They both still look all right. And if they get more help from especially US rates, they both should still continue to be bid on the overall picture. All right. So Ryan, I think that's enough for me for today. I'm giving it back to you, mate.
Yeah, thanks, mate. I'm just going to grab the screen back quickly because I want to give some of you traders a little bit of a project. Okay, you see my charts okay?
Yeah.
Yeah, cool. So we're on gold, okay? Everything above here, 2,800, okay? I've put lines on. This is what I do when a price goes somewhere where there's no price history to lean on, okay? You know me, I've said it before. You've got to let the levels develop. So what you do is you look at places where there's possibilities, okay? So I've got a ton of lines on here. Doesn't mean they're all going to work. Doesn't mean any of them going to work. But what you just look for is to see how the price reacts. Let the picture develop. So pick your own points where you think the price might do something and see what happens. You know, we could get to a situation where this happens and it goes through everything, goes through everything, goes through everything. Oh, when it decides it's going to bounce off that level and then it goes all the way back up again. Okay. So you might ignore that one. And now this one's maybe something. Okay. And then it might go up to this level. You ignored it on the way down, then it might hold it there for 5 minutes and come back down and bounce off that one. Okay. So if you're trading gold, there's no reason yet to try and sell it up here. Okay. Because we've just done nothing but go up and up and up. Okay. If you get a move from here and it does that and holds that high and comes down again, now you've got a short-term reason why we might have a top in play, but you need further evidence. Okay. And just do the homework, do your chart work, follow the price action and let the levels play out. Let the price show you where the levels are going to show up. And if you take lines off and add new lines in, that's all well and good, because what happens is then you get into a situation where you do have levels like 27.71 and that goes back a bit, but it proved to be a level, and that proved to be the bounce that took us all the way up to here, up $100. Okay, and when you identify these levels, I say they don't all work and they're not all, going to give you a massive trade, but when you do get them right, that's the ones that you can hit and make decent profits. But up here, I want you to do a little project. Pick a clean chart and just start learning how to identify levels and where the price is going to give you those levels. Okay, rather than going, oh, it's gone up $50, I need to sell it. Okay, there's no reason yet to try selling it up here unless you're having a punt. Okay, right, that's it for today. Have a great day, everybody. We'll catch you later, and if not, we'll see you tomorrow. Thanks, as always, Kay.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.